Let's discuss about the goodwill or bargain purchase in business combination transactions. So to calculate the goodwill or bargain purchase, we need to add consideration that we are transferring in the business combination plus non-controlling interest plus acquisition date fair value of acquires previously held equity interest, and out of the sum of these three items we need to deduct fair value of net identifiable assets of acquiry at the acquisition date, and if the result is positive we call it goodwill. And in rarest of rare case, the result can be negative. It means the fair value of net identifiable asset at acquisition date is greater than the consideration transferred value of NCI and acquisition date fair value of acquires previously held equity interest. In this case, it will be called bargain purchase. This can be appear in rarest of rare cases, maybe in for sale. So we need to check, we need to reassess whether we have correctly identified all the assets acquired and liabilities those we have assumed. So after the assessment, if we found that yes, it is we have identified all the assets and liabilities and liability assets acquired and liabilities assumed, and it confirms that there is existence of bargain purchase. In that case we need to recognize gain in equity as capital reserve and it will be routed through OCI. If there is no clear evidence of bargain purchase, we could not identify the reason for bargain purchase, in that case we will directly recognize the bargain purchase in equity as capital reserve. Next is the NCI. It is a equity that is not directly attributable to parent directly or indirectly. And NCI we need to measure at fair value or at proportionate share in acquirees identifiable net assets, and it is an optional to choose which option we want to adopt for valuation of NCI, and it can be, this choice is made for each business combination. It is not a policy choice. So for different transaction, business combination transaction, we can have different options, different choice. For one transaction we can measure at fair value and other we can measure at proportionate share in acquiring identifiable net assets, whatever is choice made by the acquirer. And in the business combination where no consideration is transferred, goodwill will be calculated by using acquisition date fair value of acquirer's interest in acquiry.